Hello everyone and welcome back to our channel. We hope you're doing great. In today's video, we will be talking about immigration is back in the US. So, to get all the information, pay attention and watch the video through to the end. Immigration is back in the US. Over the past 2.5 years, immigration into the American labor market has increased by 4 million workers. And the working-age immigrant population has now finally reached its pre-pandemic trend level. This is likely to be a central factor in strong employment growth, particularly in leisure and hospitality. It is also part of the story on increasing workforce participation, as well as being good news for the fight against inflation. According to Apollo's chief economist, Torsten Sloke, in a recent note to clients, immigration is a key reason that the U.S. labor market is gradually moving from very overheated to less overheated. The impact of immigration on the U.S. labor market. The fact that immigration is now moving to levels above 2019 is going to be very positive for the labor market and for the Fed's inflation challenge. Aside from pulling more women into the workforce, increasing immigration is the only quick way to bolster the labor force in any nation. Birth rates are on the decline in most rich countries, and robots and job-displacing AI software come with their own economic and political disruptions. In the U.S., immigration accounted for about half of the growth in the working-age population between 1995 and 2014. According to Pew Research. Unfortunately, between Donald Trump's Build a Wall jingoism and the COVID-19 pandemic, there was then a sharp drop in immigrant workers over the course of 4 years. According to a February paper from the San Francisco Federal Reserve, the Trump administration took 472 executive actions aimed at reducing immigration. From increasing immigration enforcement to freezing refugee admissions to moving away from family immigration. Between 2016 and 2019, the number of new permanent residents dropped 13% and the number of student phone visas declined 23%. COVID-19 didn't help. Many laid-off workers lost visas or simply preferred to ride out the pandemic in their own countries. The two trends together fueled a strong tightening in the labor markets. According to the San Francisco paper, found that the drop in immigration from 2017 onwards resulted in a 5.5 percentage point increase in the vacancy to unemployment ratio in the U.S. But happily, the recent uptick has resulted in a 6 percentage point reduction to that ratio. Recent immigration trends. More than 900,000 immigrants became U.S. citizens during 2022. The third highest level on record and the most in any fiscal year since 2008, according to Pew. The largest numbers came from Mexico, India, the Philippines, and Cuba. And the highest growth inflows were from Cuba, Jamaica, the Philippines, India, and Vietnam. Bottom line, the U.S. seems to be returning to pre-Trump, pre-pandemic rates of immigration. That's great news not just for inflation but for growth, labor force mobility, and entrepreneurship. Immigrants are more likely to be self-employed and start new businesses than native-born Americans. They are the heart of the ever-evolving American dream. Labor mobility. In my own hometown in Indiana, there are Spanish groceries, restaurants, nightclubs, and dual-language service providers to cater to a community of former migrant farm workers. A couple of generations on, they are increasingly middle-class and represent much of the entrepreneurial sealant in the area. Labor mobility, once heralded as a big difference between the U.S. and other rich nations, has been declining in recent years. There are many reasons for this, from the subprime crisis to large-scale job losses in regions that were on the sharp end of globalization or technological job destruction. New place-based economic research shows these factors tend to make people less mobile as they stay close to whatever family or community safety nets they might have. But migrants are risk-takers. They go where growth is fostering business expansion and alleviating bottlenecks to investment. This has the tendency to reduce income disparities across regions, which is something the U.S. desperately needs. One 2020 paper by the Dallas Fed found that much of the fluidity in the U.S. labor market today is down to immigrant flows rather than the movement of native workers. The future of U.S. immigration. Indeed, the Dallas Fed's research points to the fact that the future of American growth exceptionalism relative to Europe and other rich countries may be largely down to the future of immigration. Dallas Fed economists did a long-run projection that included the growth contributions of immigrants and their children. They found that if immigration to the U.S. were to continue at 2016 trend levels until 2060, the labor force would grow 0.45%, eventually creating a 193 million person workforce. Given that growth is basically people plus productivity, a larger workforce is key. Conversely, a 30% decline in immigration would mean 180 million workers, and a 50% cut would mean 173 million workers. That means millions fewer people to pay taxes, fund entitlements, and start new businesses. Conclusion. While immigrants represent 13.6% of the U.S. population, they start a quarter of new businesses. Indeed, a study by the American Immigration Council last year found that 43.8% of the Fortune 500 companies were started by immigrants or their children. Anti-immigration, business-friendly conservatives in particular should think carefully about that figure. Immigration into the U.S. has increased over the past 2.5 years, with the working-age immigrant population reaching its pre-pandemic trend level. This has contributed to strong employment growth, particularly in leisure and hospitality, and increased workforce participation, while also helping in the fight against inflation. Immigration is crucial for bolstering the labor force in the animation as birth rates decline and automation disrupts jobs. That is all for today in this video. What are your thoughts on this? Please let us know in the comments section below. Thanks for watching the entire video. Hopefully the information is useful to you. See you later in the next episode. Till then, take care.